What if you could buy a piece of a home, the same way you buy a share of stock? Not the whole house, not a rental property, just a percentage of it.
It sounds a little futuristic, but this idea is already starting to show up in real estate conversations, especially when people start talking about something called tokenization. And if you're a homeowner, buyer, or investor, this is something you're going to want to understand, because it could change how people think about ownership, equity, and investing over the next several years. If we haven't met, I'm Shawnee with Champions Realty here in North Houston. I've been in real estate for over 20 years, helping buyers, sellers, and investors make smart decisions, not just for today, but for long-term wealth. And in this series, I want to break down what's coming in real estate, not from a hype perspective, but from a practical, real-world standpoint, because there's a lot of noise out there right now. And my goal is to help you understand what actually matters. So let's start with the basics. What is tokenization? At its core, tokenization is simply the idea of turning ownership into smaller digital pieces. Instead of one person owning one property, ownership can be divided into shares or tokens. Think of it like this. If a home is worth $500,000, instead of one owner, you could theoretically have 500 people each owning a $1,000 piece of that property. Those ownership pieces are recorded digitally, typically using blockchain technology, which is just a secure way of tracking ownership. Now, don't get caught up in the tech. The important part is this. Tokenization allows real estate to be broken down into smaller, more accessible investments. What does this look like in real life? So what would this actually look like outside of theory? Let's say there's a rental property. Instead of one investor owning the entire property, multiple people could own portions of it. And if that property generates rental income, those owners would receive a percentage based on what they own. In some models, people could even buy and sell those ownership shares, similar to how stocks are traded. Now again, this is still evolving, but the concept is real estate becomes more flexible, more divisible, and potentially more liquid. Why people are paying attention? There are a few reasons this is getting so much attention right now. First, accessibility. Traditionally, real estate requires a lot of capital. Tokenization lowers that barrier. It allows more people to participate in real estate investing without needing hundreds of thousands of dollars. Second, liquidity. Real estate has always been considered an illiquid asset, meaning it takes time to sell. But with tokenization, the idea is that ownership pieces could potentially be bought and sold more easily. And third, global access. This is a big one. Tokenization could allow investors from anywhere in the world to invest in U.S. real estate with fewer barriers. So when you combine lower entry points, potential liquidity, and global access, you start to see why people are paying attention. Now let's slow this down for a second, because this is where most people either get overly excited or overly skeptical. The truth is, tokenized real estate is still in the early stages. There are still major questions around regulation, ownership rights, legal structure, and how this would work at scale. This is not something that's replacing traditional home ownership tomorrow. You're not going to wake up next year and see every home turned into shares. But that doesn't mean it's not important to understand. Because shifts in real estate don't happen overnight. They happen gradually, and then suddenly feel obvious in hindsight. So what does this actually mean for you? Whether you're a homeowner, buyer, or investor, this is less about what's happening today and more about how ownership could evolve over time. It could change how people invest, how equity is accessed, how properties are bought and sold, and even how people think about owning real estate in general. But here's the key. The fundamentals of real estate are not changing. Location still matters, supply and demand still matter, and smart decision-making still matters. If anything, understanding trends like this just puts you in a stronger position. Not because you need to act on it today, but because you're thinking ahead of where the market is going. In the next video, I'm going to break down something that hits a lot closer to home. Whether you could one day sell part of your home instead of the whole thing, and what that would actually look like. If you want to stay ahead of what's happening in real estate, not just react to it, make sure you subscribe. And if you have questions about buying, selling, or building a strategy in today's market, feel free to reach out. I'm always happy to help. I'll see you in the next video.